The oil price has spiked at levels not seen since November 2014. Why? And is the long oil trade still in play? Angelos Damaskos joins us now. He's fund manager at the Junior Oils Trust. In addition to this, we've also got to talk about the OPEC monthly report, which just been released. It says it sees a tighter market after output fell to its lowest in a year. It's talking about declines from Venezuela, Saudi Arabia and Libya. Clearly, there are a lot of elements here conspiring to push this price higher. Also got to talk about recent developments geopolitically. What do you see as the main factors driving the price of oil up at the moment?
Well, Jeremy, the oil price has been on a steady rising trend for 2 years now, since the lows of 2016. But at the moment, the geopolitics are catching the headlines. It is clear that the spat between Russia and the Western allies, and most importantly, what's happening in the Middle East with Syria and Saudi Arabia and Yemen, are very much causing a lot of uncertainty to investors, and therefore oil prices are very much in focus, and people are worried about potential supply. Now, underneath that, the reason we believe we have been seeing a rising trend in oil prices are the fundamentals driving supply and demand. And we know that demand on one side has been growing steadily. According to the IEA estimates, more than 1.5 million barrels per day of growth every year. And on this chart, we can see that aside from American demand that is growing healthily and a little bit from Europe, the most important constituents or the most important drivers of demand are the emerging industrialized countries of Asia, particularly China and India. So that's where demand comes from, and it drives demand for petrochemicals, for aviation fuel, and all the likes that are not so much impacted by the alternative energy sources that everybody is talking about. So the clear indication is that this demand is likely to continue to drive higher, and on the other hand, we see supply being in a shortfall.
Indeed, as we've just seen exactly here from OPEC with these latest headlines suggesting that Venezuela, Saudi Arabia, two of the biggest producers, have seen declines in output for two very different reasons. I guess it really has to be said. You've got another chart here. Explain what's going on here, because I think this highlights, in fact, Venezuela as a potential loss. Explain more about this and how this supports your argument.
Yes, this chart shows in the black boxes the cuts that were agreed by OPEC in late 2016. But in addition to that, we now face the risk of further supply destruction coming out of Venezuela. We know that the Venezuelan economy is in dire straits. They suffered a tremendous crunch last year, huge inflation rates, and a lot of political uncertainty. The state-owned PDVSA, the Petróleo de Venezuela giant, has not been able to invest at all in its fields, which are rather mature and all. They have not had any new finds. So there is the natural decline of production of these fields that cannot be arrested unless there is significant technical and financial investment in it. So according to some expectations, there could be another 400,000 barrels of oil production lost out of Venezuela in the current year. And then we have the sanctions against Iran and the potential loss of production coming out of there. So in what already is an undersupplied market, we could have even more severe cuts coming out of these two regions only that could exacerbate the picture. And this is what is driving oil prices higher, and we believe that it could drive them significantly higher.
Right, okay, that was going to be my next question, actually. This is a chart of Brent, which is at 71.30. We've seen a chart of US crude, which is WTI, which is about $66. Where do you see these going over the summer? Is the long trade, as I said at the top, still in play for oil?
I think it's very much in play, and it could go well above $70, potentially touch $80 per barrel before the year end.
Are you talking Brent or WTI here?
I'm talking about Brent,
okay.
At the moment. WTI is not far behind. At the moment, the differential is between $5 to $6, but it has the tendency to widen and narrow over the period due to the trade flows between America and the rest of the world. But nevertheless, Brent is still very much a key benchmark for many types of crude, and the market looks at it as the key driver. So if we hit somewhere around $80 a barrel, I think this could be transformational for many companies which are operating at very healthy cash flow rates at that level.
Indeed. Look, Angelos, we've got to leave it there, but thanks indeed for joining us. With this look at the price of oil as it continues to rise, and as Angelos was saying, as we expectations are potentially that we could well see an uptick in some of the tensions around the world, and certainly around the Middle East, it could well see further gains in the price of oil. That was Angelos Damaskos, who is the fund manager of the Junior Oils Trust. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.